It's an absolute delight to sort of kickstart this event with this wonderful panel. I've been a financial journalist for about 25 years now, and many of the people out here have invested all their entire professional life in building this industry that we definitely did not think 25 years ago that could be this sizable, and retail investors would take to this as their primary investment vehicle of choice. So thank you so much, all of you, for joining this. This is especially a meaningful conversation because we are approaching this magical number. Of course, people have already, Kalpen and Radhika have already told me this is, $1 trillion to abhi pahunch hi gaye hain. Of course, pahunch gaye hain. And hoping that the markets are also generous. It'll be here very soon. But what is the next trillion going to look like? What are some of the opportunities? What are some of the course corrections that we need to sort of look at from here on? So I have, in my mind, what I think as 3 constructive points to discuss, and 2 points which are widely debated, I know, within the industry, in the ecosystem. So we'll get some, conversation around that. But first thing, let me start with Kalpen because he's been most vocal and consistent in this messaging that over the last 5 years, and this is perhaps the biggest challenge, that over the past 5 years, our returns in equity markets have been double the long-term average. And this is... you may say it many times, and I think a lot of people are saying it many times, but still, एक पाकिस्तानी पोएट है जो बोलता है कि दूसरों की कहे से कौन सुनता है, सबको एक हादसा जरूरी है. So investors maybe to drill this, by messaging is easier said than done. So how do we get this message across that you've earned twice the return that is possible in this market? Perhaps a little more is possible, at half the volatility, as you put it.
So you start with tough questions to me, so I'll take the bouncer. Yeah, of course, we've been fortunate that disciplined investors earned that 2x return. And what we always tell investors that, why did you earn that 2x return? Because you invested when past 5-year returns were half of the long-term returns. So returns are cyclical, markets fluctuate is the only truth. And all of us collectively have been messaging. In fact, recent ad campaigns by even, AMFI have been around highlighting volatility and the need to think long term. And as you rightly said, universal truth या सत्य एक ही है, उसको 1000 बार अलग-अलग तरह से repeat करना है. I will say it will have effect of 1 unit. Nilesh bhai will say it will have effect of 100 units. And with Radhika, it might be 1000 units. But we will keep saying the same things again and again. And I think another important transition or maybe, migration we need to do is probably talk about rolling returns more often. Talk about, what can be the best, what are the worst case returns if you had invested for 10 years and what are median returns. Right. So that's one way in which education can be done with data points also. Apart from the fact that, typically the way to educate investors to invest in Indian equities has been around the growth story of India and the fact that, we are a democratic country with growth. So that's using the dimension of future growth. And at the same time, we have 30-year history now. And in this 30-year history, we have had cycles of 5 years of zero returns, 10 years of moderate returns. So the more collectively we make those efforts to use factual data, because our industry is also about maths and data and facts. So this balance can help investors. So that direction, if we move towards leveraging more of rolling returns as a communication point versus lowest point to highest point, is one good way to do it. And the second thing I think, which I am happy about is, when both of us were in a company called Prudential ICICI, we had this fund called Equity and Derivative Fund, which has now been repositioned. That category is now a dynamic asset allocation fund or balanced advantage fund. So beautifully, in the last 5-10 years, the industry has grown that asset class extensively. So that asset class auto-adjusts across equity or bonds, depending on valuations and cycles. So in the last 5 years, markets have given a lot of lessons of corrections, though they have been short-lived. So the pain has been temporary. the volatility has been lesser and, for a shorter period of time. But these funds have cushioned it a lot more. And a lot of education done around the fact that asset allocation will help you stay put and reduce volatility. These are two things I think we need to continue to communicate, and that is our responsibility. If we just play that role, I think we will continue this growth path.
I like your first point, especially Navneet. As an industry, are we prepared to म्यूचुअल फंड सही के लिए एक डिस्क्लेमर चाहिए कि क्या एस्पेक्ट सही है क्या सही नहीं है बिकॉज द मोमेंट यू पुट रोलिंग रिटर्न यू आर ऑल्सो पुटिंग एम्फोसिस ऑन द डाउन साइड एंड अ लॉट ऑफ पीपल वुड विद इन द इंडस्ट्री वुड आर्ग्यू यार अभी तो स्टार्ट हुआ अभी से तुम डिस्क्लेमर करना शुरू हो रहे हो
The difference between our industry and any other product is that there is tremendous amount of emphasis on the disclaimer. If you do a survey across the country, what do you know about the mutual fund? Of course, now after 10 years of hard work by everybody in MFI, they know one thing, mutual fund sahi hai. But if you ask them, और क्या, तो उनको एक ही याद है. Mutual funds are subject to market risk. Please read the offer document carefully. I think 1 billion people can recite that exactly in the same manner as we put it. I don't think there is any other industry where the disclosures are of the standard that we have. We take huge pride at the same time with a lot of humility that if you compare us with even the developed markets, I think our disclosures are a lot more robust and a lot more frequent in terms of like an investor constantly know what's happening in their portfolio. And that's where like a lot of credit to SEBI and MFI and SEBI. We work together. Mr. Amarjit Singh is here. We work under his guidance. So we take a lot of pride in that. So let me complete. We are also saying that this campaign started in 2017, and I always call this, it's something like pre-suasion. I'm sure you are one of the most well-read journalists in India. This persuasion of Rolf Dobelli. And I keep thinking, this is like what we have done in mutual fund sahi hai, is a pre-suasion. You just kind of like create a curiosity around it that you've been investing like this for not decades but hundreds of years. Indians have said we are great savers but we need to become great investors. You have been investing in a certain manner, but I think you need to look at another product. So what we did was kind of as an industry as a whole, and then it's for all of us together and with the help of advisors and distributors and the people like you, then you do the persuasion, like what is right for you. You are absolutely right, and within the MFI board and our own financial literacy committee, we have been discussing that. Now we need to move to the next level. From mutual funds sahi hai, we have created that awareness which was very critical. It's got us like a couple of million more investors into the fold. The next level has to be क्या सही है, कैसे सही है, क्यों सही है. We have been making a lot of efforts over the last couple of years or more so in last couple of quarters, thanks to again a lot of partnerships with people like you. But there's a lot more that I think you are going to see from MFI over the next several years.
I love that word, by the way, persuasion, Robert Cialdini's word, and it's a wonderful concept. DP sir, your thoughts, because your reach is the highest. And to send this message across that mutual fund sahi has been done. How do you make people aware of the risk, the fact that there is volatility, the fact that returns are not going to be as good, and for a lot of small SIP folks that you might be attracting, it is not just about last 5 years. The fact that equities are a volatile asset class itself may be a new concept.
No, first thing first, I absolutely echo what Navneet has said. The pursuance and the way the whole industry is working is something which is very important. And recently we in our fund house, we have come out with a website, mutualfundqsahihai.com. Okay, that is there on this thing, and we say mfqsahihai.com. And kya sahi hai, kyun sahi hai, exactly what you are saying, that is more important. And at the industry level also we are doing it, at individual level our player we are doing it. But this is extremely important going forward when people have seen such a good return over the last 5 years, 10 years. So it's our responsibility to take the message along at every nook and corner of the country. Even we have published under the investor education do's and don'ts for the investors. We are publishing that, we are putting the posters all across the country in distributor's office. Of course, when we discuss in MFI board meeting and all those things, it's not only the industry, industry body who has to do it, individual fund houses also have to do it. And we feel that especially when we talk about SBI branches, which are there, so we feel that that's one thing where we have to put posters. We have put thousands and lakhs of posters, do's and don'ts for the investors. We have put the posters in the branches so that there is no mis-selling, there's no concept of, any misinformation, especially going forward, what all we can do. So those are some of the subjects we all, as an industry, as well as individual fund housing, we are doing it, but this is extremely important. And actually, when your auditor was talking about the 2015, the whole industry was 12 lakh crores, and today it is 72 lakh crores. I was just wondering that today we are 12 lakh crores as a fund house only, and when the industry for 10 years ago, so I was thinking, is it possible that in 10 years again, after 10 years, will be 72 lakh crores or not? So that is the kind of growth we can see it, and we're looking for a period when, today we are talking about deposit to, AUM to deposit ratio, but I think next 5 years, 10 years, it will be other way around. People will be talking deposit to AUM ratio.
Right.
That's what we are looking for.
Right, true. So quickly moving on to a slightly larger canvas. 50% of the total mutual fund in AUM, roughly, is tied to equities, right? Now, because this money is gushing fast, of course, I don't know whether we should say fortunately, unfortunately, the SIP flows, total number accretion is going down. But otherwise, because of this flows, we've talked about this, there is this bubble that gets created, especially in segments that are, momentum driven and so on. And mutual fund industry as such has really proven its worth in terms of transparency, like Navneet pointed out, disclosure norms, it's very cost efficient, all the virtues of, liquidity, all of that is sorted. So we have a great framework. What do you think can be done or should be done to take the product canvas beyond equity and debt? Because the essence of investing safely is about diversification.
So thank you, Mahalakshmi, for having me here. And DP भाई, तू ये 72 लाख की बात मत कर. ये $1 ट्रिलियन तो हमने तेरे लिए ही छोड़ा है. तो तू 88 लाख करोड़ कर देना. बाकी फिर हम लोग थोड़ा काम कर लेंगे. Now, how do we expand industry? So first of all, I have to convince all these ladies and gentlemen sitting over here that if you keep currency notes at home, it will not grow. Collectively, they have 35 lakh crore plus currency notes at home. The total amount invested in mutual fund, excluding mark to market, will be less than that. And our returns, as Kalpen mentioned, is 12, 15, 16, 20%, whichever number you like. तो मुझे तो इन लोगों को कन्विंस करना है कि भैया घर पे पैसा रखेंगे, उसके जार्ड नहीं उगेंगे, म्यूचुअल फंड में डाल दो, थोड़ा ऊपर नीचे होगा बट पैसा बनेगा. इट्स सच ए डिफिकल्ट टास्क. रिटर्न पे रिटर्न दे रहे इतने सालों से, बट ये लोग पैसा रिलीज नहीं करते. सेकंड, ऐसा नहीं है कि इंडियन इन्वेस्टर्स आर लाइक दिस. I can go to Japan and show them the return they have made in Indian equity. And the return they are making in their equity or their fixed income. Undoubtedly, they should be putting more money over here. So one is to expand the investor base. Today there are 30 crore plus vehicle owners in India. The number of investors in mutual fund is 5.5 crore. Ideally, every vehicle owner should be a mutual fund investor. So I still have to grow 6 times more. But convince karna baki hai, Mr. Mendes. The second thing is in terms of product. Clearly, as of today, we have products across equity, fixed income, and precious metal. But can we expand this into many other products? Thanks to SEBI, we are slowly and steadily moving into that. So REIT InvIT is coming, performing credit in AIF is coming. But any product which is bordering on the debt side will require rule of law. Return of principal is more important than return on principal. And in India, if you are stuck in ILFS, you never know when the principal will get returned. So we need rule of law so that we can create structure between debt to equity, between lower risk to higher risk, and hopefully over a period of time, we will have enough product to meet different risk return requirement of investors. The third will be geographical expansion. Today, whether we like it or not, we are still mainly urban India phenomena. Undoubtedly, semi-urban and rural India, we have penetrated, but there is far bigger scope. So how do we create channel whereby we can go to different geography? So either we'll have to expand investor base, or we'll have to expand geographies, and we'll have to expand product. Combination of that three will ensure that whatever DP Bhai creates, we'll also be able to create as an industry.
No, my question was slightly different. Of course, you're talking about investor growth and growing the size of the industry, getting more investors invested in the mutual. I'm asking that right now this framework has only two broad asset classes, which is equity and debt. There is real estate, there is commodities, there is a lot more which offers diversification. I'm asking this question because in India, we have always narrated this line that, in the long term, and I think it's, I don't know if it's narrated as often in other countries, we don't know, that equities are the best asset class over long terms. And it's not necessarily true, because the champion of this line is only the United States. You look at Japan, 20 years, no return. Last 10 years, no return in China. Brazil, long periods, no return. Russia, no return. So there are several examples in the world to show that long-term equities need not be the best asset class. In many countries in Europe, debt has been maybe a couple of notches below. Real estate has been on par or better. So how do we take this fantastic, efficient framework to cover other asset classes to be able to give a safer, a better milieu of products to investors?
So we have on precious metal, gold and silver products. Could I be going into other commodities? But we need rule of law there for me to participate. Otherwise, I'll end up creating national spot exchange equivalent phenomena. The commodity markets, either the arbitrage is very, very low, the returns are poor, or there is no security. In terms of real estate, again, do I have ability to manage REIT? Answer is yes. And we have gone to SEBI to increase exposure to REIT, InvIT, and they are actively considering it. But can I be running a real estate project? To a builder, it is 20, 30, 40% IRR. But we have seen experience of all the foreign capital which came into real estate investment over last 20 years. They have barely delivered better return than savings bank account. So one, we need rule of law so that institutional capital can flow. We need to attract talent. And then we need regulation which will support that kind of product creation. Can it all happen tomorrow? Answer is no. Will it happen over next 5, 6, 7, 10 years? Answer is yes.
Sure. Radhika, you are a relatively young fund house, and usually all these, things really, new ideas really come from the periphery, the newer, younger players, and they sort of come and disrupt and create a whole new game. How geared up do you think are the, relatively smaller, younger players in the mutual fund industry to drive something like this?
I'll answer that, and thank you for having me here. But, newer fund houses are often called innovative, etc. And this word in the context of innovation, and I'll also just plug into what Nilesh bhai said, has always thoda sa scared me. India has today a lot of asset classes. You have equity, you have debt, you have gold, you have silver. You want to do bronze arbitrage, you can sit and go do that. You have SME, IPO. You have actually no shortage of asset classes today in India. Net, you still have 5 crore investors in the country. I genuinely believe our job is market expansion. Now, the other thing you have to realize is India is a very nuanced consumer market. You have treasuries and family offices with 1,000 crore corpus who can happily, who have a 10, 20-year risk appetite, who can absolutely put money into REIT and all this stuff. And you have people who are making their first 100 rupee SIP who don't even realize कि अगर मैं equity में पैसा डालूंगा मेरा return कितना होना चाहिए. That is the cross spectrum of consumer that we deal with. And I think you have to build you have to build products for consumers. So today in India, I think for 90% of consumers, actually equity and debt is just right. It is dal and chawal for a population that is not very, very nourished. And why should you confuse anybody with anything else? Dal chawal for the next 10, 20 years is actually good enough. For the next bracket of investors, by the way, SEBI has created something called specialized investment funds. Some of us have got licenses and are launching products. I'm sure many of them will. So for a 10 lakh consumer, we are giving dal chawal with some tadka, some ability to do derivatives. For a 1 crore consumer, SEBI has created AIFs where you have venture capital funds, SME, private credit, you have everything. So for different life stages, we are actually building diets. So I think, we have to be a little more nuanced about that. As far as innovation, I think innovation in any industry has come from outside, but I think innovation has to be deeply purposeful. I'll speak about 2 sensible pieces of innovation, one that came from our fund house and one from another one. The whole balanced advantage fund category is not very, very complicated. But I think it's an incredible innovation that came from a fund house that catered to the need of an Indian consumer. I think Bharat Bond ETF, in the way it's scaled, the whole concept of target maturity fund, FD in a tax efficient format is very sensible innovation. And the third most sensible innovation that has outclips the word mutual fund is what? It's not even a product. It's called SIP. It's a feature. It caters to the savings need of Indians. So we are innovative, but we are innovative with a purpose.
Sure. So my question was only because of the sense of risk perception related to equities, which I don't know if all of you agree.
But you know, one global market. I can just add thing. I don't know if to change at least when someone invests in equity, they understand what they're investing in. They see the Indian economy. They see the growth of companies. They see companies listing on the exchanges. I don't know if by buying an ETF that Nilesh bhai is long oil and short copper, you're actually creating a product that is better for the consumer.
By the way, till few years back, Mahalakshmi, in any of these events, and both Nilesh bhai and I, we were the bond fund manager, the biggest criticism of our industry were 2. And Mr. Singh is here, he has seen our journey over the years, and a lot of time we'll have somebody senior from SEBI coming in, a lot of other people like you. And the biggest criticism were 2. Number 1, your industry does not have as much individual participation. Most of your money is institutional. Number 2, your industry thrives on fixed income money. You guys don't have still the equity penetration. This is only in last 6-7 years where we have seen equity flows of this order. Our SIP book, after 20-30 years of hard work, only reached 4,000 crores in 2017 first time, which has become now 26,600. But I think this is just beginning, because if you look at the overall household balance sheet in India, the equity allocation is still less than 5%. Equity allocation is still less than 5%. So our worry should be that how are people going to secure their retirement if the participation in the growth of the country is that less by a large number of people. And a Viksit Bharat, unless it is equitable and inclusive, then it won't really be Viksit. And that's where the role of the capital market and providing that growth opportunity to at the population scale. The other thing I'll mention just to add to what Radhika and Nilesh bhai. So if you look at our growth, so we have become $800+ billion, will be $1 trillion for sure. Just to put this number in perspective. This is where US was in 1988 or so, you can check. And by the end of 2000, they were $5 trillion. And you can see a lot of other parallels between what happened in US and what's happening in India. Now I won't get into that detail. But I think your point is very valid that, and the reason for our success from 100 billion to 800, The things that have helped us, apart from the track record that Kalpen talked about, apart from transparency, apart from the training effort that we have put in place, apart from technology, the other way to look at the macro factors is basically the formalization of the economy. It's the digitalization of the economy. It's digitalization of finance. It's financialization of savings. Some of these are talked about quite a bit. The thing which is not talked about, which you will see in next 20, 30 years, is the financialization of assets. Because that's where the large part of the investments are. When I see a Blackstone CEO coming here, a Brookfield CEO coming here, and saying that we'll double our investments from $50 billion to $100 billion in next couple of years. And I keep thinking that why are roads, transmission lines, data centers, commercial real estate, so on and so forth, is owned by teachers in Quebec or let's say the firemen in Australia? Why are Indians not owning it? I think it is going to happen. The fractionalization of assets, and I think mutual fund is a wonderful vehicle. We have shown this over the last several decades. I think over a period of time, we will have a role to play. As the REITs markets, InvITs market develop, I think our ability to provide that solution to investors, I would say stable returns by owning a hard physical asset in a country of like, our kind in terms of rule of law, in terms of policy and all of those things would be phenomenal over the next several decades. It's just a matter of time.
Fair enough. Now, on that note, I'll quickly get into a territory which is highly debated, DP sir. There is this categorization that is allowed by SEBI in both equity and debt, 16 categories, equity, hybrid together, and 16 category of funds within debt. And despite that, we have about 40, 44, I don't know what's the exact number now of AMCs. We have about 1,880 fund schemes. Now, on any given day, the daily average number of stocks traded on NSE is about 2,000 to 2,200. Now, the problem of selecting a fund seems to be far bigger than the problem of selecting stocks. Now, on one hand, we are saying investor awareness and literacy and stuff like that, and we are making this whole thing so complicated. And it also sounds like a hypocrisy of sorts that you have categories, and yet there is no cap on the number of mutual fund schemes a asset management company can have.
See, we have got only 50 fund houses, and as SEBI is making it easier to more and more fund houses to come, I think 1,800 can be 3,000 also. That's one thing, because categories, they are large cap stocks. As you said, only 2,000 stocks. Yes, 2,000 stocks, but if you go through the mutual fund portfolios, I don't think all fund houses put together will be more than 600, 700 stocks. Okay? I think universe is common, right? 400, when anybody will be having a universe of 200, 300 to say 400 to 500. But 700, 800 will be the total stocks which will be there. So having said so,
तो आप क्या बोल रहे हैं मतलब कि लोग स्टॉक ही खरीद फिर
I'm coming to that. See, when the categorization was done, it was done very, very, with a lot of discussions, a lot of consultations with the people. And the industry has grown so much. As you were saying, today our equity, AUM is more than 2.5 times than what the whole industry was 10 years ago. So when the funds are going so much, and if you look at in other countries, and developed countries also, every fund house will have so many schemes. Now they are having so many ETFs, so many schemes. But investors have also evolved, and today number of schemes are more because of so many thematic funds have come, so many sectoral funds have come. Whenever there is a bull run in the market, people go to the micro sectors and some schemes like defense sector, this sector, that sector. So number of schemes have gone up. But if you look at it, the overall, all put together, the maximum AUM, 70 to 80% AUM will be 5 or 6 categories. So that is, we have to see, and that, it's not that the whole AUM is in so many sectors. If you talk large cap, mid cap, large and mid cap category, focus category, and small cap, if you all put together, I think the 80% of the AUMs will go there.
No, fair point. But from an investor's perspective, the problem of selection, is that not a real problem? Is that not
no? Do you order from Swiggy, Zomato?
Never. I do. Why?
I mean, there are like
no,
thousands of items. I know that. So this morning my wife is traveling and I was in a hurry to go to office and I ordered like a chayoska chai plus the poha because I only needed that. It doesn't matter like where lots of other things might have been there and they will always pop up like 7 other things. If like it was a little more complicated other than that, let's say the same thing about the medicines, right? But then I'll have an advisor, just like a doctor, I'll go to them and they will prescribe me.
You are trivializing the point. I mean, you can't
पे
compare
इतनी दवाइयाँ उससे क्या
financial
फर्क पड़ता है?
investments of a lifetime with ordering on Swiggy, Navneet.
No, all I'm saying is it depends on the investor because if there are 50 AMCs, you'll have 50 large cap fund, right? This has only happened in India. And again, maybe I won't get tired like praising SEBI for what they have done. I just hope at some stage ICI in US, Investment Company Institute, does a paper that there is so much we can learn from India. There's no country where you have this kind of classification. All of us can only have one large cap, can have one flexi cap, can have whatever one. And within that, what is large cap, top 100, whatever, next 50. You go to US, somebody will say mid cap 5 billion, somebody will say mid cap 20 billion. There is no standardization. Everybody has got S&P 500. And I keep thinking, Cathy Wood's fund versus somebody else's fund, somebody value, somebody invests only in REITs and whatever. In SEBI, like you have a proper benchmark. So I think that way with the classification, with the uniform benchmarks and the amount of information and all, I don't think like we have reached a stage where people are spoiled for choice unless others have a different view.
But are you, Radhika, truly worried about, narrow thematic funds like, tourism fund, defense fund, EV fund, and, we also take refuge in the fact that, passives are no risk. So what are your thoughts?
Okay, I have a related but slightly different view. And this discussion on too many categories, too many funds, काफी हो चुका है. It is also important to be a little solution oriented. Now we've had a lot of food analogies, but it's my son's birthday today and he plays with lots of little Lego pieces. I think as an industry, we have created a lot of funds, a lot of categories, all the individual pieces of Lego are there. We've done mutual fund sahi hai, we've established trust. I think what we perhaps now need to do, and I learned this writing our book, is explain kaun sa mutual fund kaise sahi hai. I think step 2 of mutual fund sahi hai is kaun sa mutual fund kaise sahi hai. For instance, if we have 45 categories of equity funds, to DP's point, there is a core category of funds, and maybe as an industry we need to now talk about these are the Lego pieces. Here are recipe books or here are guidebooks on how you put them together. This is your core category of funds. Yes, there are 30 thematic funds, including tourism fund and future of transport fund, but these are all satellite category of funds. These are gardens. They're not the main Lego blocks. We attempted to do this in Mango Millionaire. We actually attempted, and it was so difficult. The hardest chapter I wrote in a book on personal finance was the chapter on mutual funds, because it was very, very hard to try and break down what was core and essential to everybody and what was satellite and not essential. So I think perhaps now we need to talk about how to build with the Lego pieces.
Okay. Fantastic point, and I have a point related to that, which is, now we have this special investment fund category, which is over 10 lakh, right? Now, because I'm presuming that everybody is on the same page with the fact that, narrow thematic funds are essentially should be seen as high-risk funds and should be well understood. It's not like for a mass market product. Why not put those satellites into this SIF category? Just because they're plain vanilla, don't use derivatives, doesn't make them less risky. So why should they be under this, mutual fund category at all? They should be in SIF category. What are your thoughts?
I was just looking at chair there. Amarjit Bhai is there.
Yeah.
Whatever he says, we'll do it.
What are your thoughts, Kalpen?
I think
अमरजीत भाई जब आप बाहर गए थे तो इन्होंने पूछा कि थीमेटिक फंड्स रिस्की फंड्स है, उसको आप एसआईएफ में क्यों नहीं डालते? मैंने बोला जो साहब बोलेंगे हम करेंगे.
Yeah, I think we've moved from few funds to plenty of funds, and in evolution it's happened. Personally, my view is there has to be a slightly better nuance, better balance, and we have to bring in better responsibility of also launching thematic funds with guardrails. even timing them, because many times we also know that we as human beings mistime our investments by buying the theme at the wrong time. So at least we found the middle path to say that, and I'll tell you why. Like ideally, I would love to do what PPFA has done, just one fund and build very large. But our investors have different choices, different levels of understandings, needs at different points in time. So how do we think of that balance? That bring thematic funds. So we try to have this very crude, intuitive way. Will we put our own money in that fund when we do an NFO of a thematic fund? If the answer is yes, we are happy to launch that. If the answer is no, we'll not launch that. At times when returns are very high. We had, like I remember at some point in time, our natural resources fund had 40% CAGR, and it was investing in energy and metal stocks. So we stopped taking money. On our website, we put a huge disclaimer in black and red, saying that, this is thematic, not suitable, take appropriate advice. So I think choice sometimes becomes confusing, but there are ways to solve by educating better and by transparently highlighting what could be the risk. But at low cycle, sometimes some of these thematic funds can actually deliver very superior return for a more sophisticated investor. And this is a good, interesting point you've said, that could they be a part of SIF? Maybe it's a good thought to debate and evaluate.
But just one point, taking market call is not as easy. नवनीत भाई ने डिफेंस फंड लॉन्च किया, पैसा ज़्यादा आ गया तो उन्होंने सब्सक्रिप्शन बंद कर दिया, SIP कर दी. मैं सोचा नवनीत तो बहुत स्मार्ट आदमी है, अगर वो बोलता है डिफेंस एक्सपेंसिव है मत लॉन्च करो. नाउ आई एम रिग्रेटिंग, इट इज़ द बेस्ट परफॉर्मिंग फंड. तो मार्केट कॉल लेना उतना इजी नहीं है.
Even the SIPs are closed for over a year now. It's probably the only open-ended fund where you cannot put any money, even in the form of SIP, for last 1 year. I think all of us have that sense of responsibility on us.
No question about that. So that's all we have time for, so we'll have to wrap it up. Thank you so much, the lady and gentlemen, for this one.